Good morning, good afternoon, good evening, everyone, and thank you for joining our webinar today. I am excited to be here today and present to you what we've been working on for a little while now, which is the Disclosures and Reporting 2.0 for revenue accounting and CLM. And I have a really great team here with me, and we're excited to be presenting to you. Really quickly, just remind you that the webinar is being recorded. So you'll have an opportunity to share this and go back and take a look at it and share it with your colleagues. Feel free to ask questions throughout the session. There is a window down there that you can ask questions. I think it doesn't quite look exactly like this. There's a new version, but it's the same concept. So go ahead and ask your questions. And of course, you can download previous webinars from our homepage. Go there to bramasol.com. There's a couple of different places you can do that, either through the Resource Center or through the webinars. Join us on Facebook. We have ongoing conversations there. We'd love to hear from you. LinkedIn, we publish a number of articles every day and have a LinkedIn page, and would love to hear from you there. And of course, we have a wonderful YouTube page, and there are probably almost between 50 and probably almost 100 videos up there that you can explore different topics such as leasing, which is why you're here today, but you can explore leasing, treasury, revenue accounting, and S4HANA, including S4HANA Cloud, analytics, etc. So I encourage you all to go do that. So today we're here to talk about Bramasol's reporting, disclosures, and dashboards, and we're calling it Dashboards 2.0 because the team has done a tremendous job in evolving and updating those. And on the phone today, I have with me, or on the webinar today, I have with me Julio de la Costa. Hello, Julio.
Hi, good day, John. How are you?
I'm fantastic. Vivek Thomas, who owns the product and has been doing a lot of the work on developing it. Hello, Vivek.
Hey, John. Hey, everyone.
We have Carrie Peterson. Hey, Carrie. She's one of our senior solutions engineers. She'll be showing us the CLM work.
Hi, John. Hi, John.
And Sarah Thompson. Hello, Sarah. How are you today? She'll be doing the RevRec.
I'm good. Thank you, John.
Awesome. So, one of the reasons I do this and I talk about it, it's sort of, we talk about the big so what, or why are we here? We're here today because Bramasol has a new set of some new reports and new features in our reports, and we wanted to share those with you because at the end of the day, this is all about, a lot of it's all about the reporting and the insight. We've improved the performance and we've layered in some analytics. And how did we get here? Well, we got here through a number of things. One is primarily through customer feedback. Our customers have told us that they love the details, they love the reports themselves, and the fact that they drive down to the details. And Vivek will talk a little bit about that in a couple of minutes. But they wanted things to come up at a summary. They wanted to be able to do that. They needed to scale. And Vivek will talk, and Julio will talk a little bit about the scaling and how we've gone from really 40 to 50,000 POBs up to a huge number, and I think that'll be really interesting for you. And they told us they wanted to keep the drill down, drill through, and drill back for lots of different reasons, including auditing, in insight to action. So with that in mind, what we'll do is I'll turn it over. We'll go and talk about the SEC side. So Julio, the SEC, despite the COVID, has been pretty busy out there talking about the RevRec. Maybe you can share a couple of key highlights that you see and think are important for our audience to be aware of.
Yes, thank you, John. So as we see in the screen in front of you, there's been a lot of activity from the SEC. Public companies have been reporting ASC 606, IFRS 15 for almost 2 years now. And as a result of that, they consider the reporting model relatively stable. And that means that now they can start asking questions to their filers. So some of the key topics that have been highlighted in the last 12 to 18 months has been looking at your data points. So some people have seen that there's been inconsistencies between your qualitative and quantitative data. As a requirement, we know that there's both, the SEC allows both qualitative and quantitative. And what we found is, what the SEC found is, companies have been reporting incorrectly when it comes to qualitative versus quantitative. The next important topic is contract asset versus remaining performance obligation. So for those RevRec aficionados out there, you would know that a contract asset has not turned into a performance obligation until there's a unbilled receivable turns into account receivable. So usually that account receivable would be looked at in the remaining performance obligations over the next 5 years. What is to be done? So apparently a lot of companies have not really fully grasped that concept about differences between contract asset versus remaining performance obligation. You know, on a holistic level, performance obligations is one of the new concepts under the 606 guidance, where you start taking goods and services in your POs and you start assimilating them into a performance obligation. And it appears that from the SEC's comments that a lot of companies have been struggling with understanding what needs to be combined in a performance obligation. When we look at other challenging topics, customer acceptance provisions seems to be one of those issues that keeps on coming up, John. And then lastly, wanted to talk a little bit about disaggregation because, and in this one, we will show shortly disaggregation of revenue, because it's very important to understand that one of the key components in the new guidance is disaggregation of revenue, because the SEC wants everybody to understand how does a company generate its revenue. So John, with that, I'll take it over to you.
All right, well, thank you. And let's move on to, let's talk about the features and what we've done. And I think they fall into 3 basic categories here, and we've highlighted a few things. The first is the addition of the reports, the new reports and some of the features. We'll talk about the performance improvements and the overlay of the analytics. Vivek, Julio and Vivek, maybe you can highlight one of these and talk about that, and then dive into this whole idea of the performance.
Yeah, I'm just going to take the first 3 topics, John, which is, so like you said earlier, a lot of customers love our reports, but they wanted some additional features, which was, okay, so you can, your operations revenue team, they can easily look through the granular detail. But how about the financial reporting teams? Usually what they're looking for is summary level data that they can basically take and drop into their public filings, Qs, Ks, and what have you. And as a result of that feedback, Vivek and team and the old Bramasol team, went ahead and created these 3 new reports, which have been, as they say now, game changers, because it actually opens up a new audience for our reports. So our first audience was the operational revenue accounting teams that actually looked at, did the transaction post correctly? What was the volume of the transactions? But now you also have the financial reporting teams, which can actually use those 3 reports, disaggregation, contract balance roll forward, remaining performance obligation, and really basically use those to report in their 10Q, 10K. Just one thing before I turn over to Vivek, contract balance roll forward is by definition the most challenging disclosure. Why is that? Because the FASB actually wants to see a prescription of a roll forward. So for all those accountants out there, we know the roll forward contains your opening balance, your closing balance, and everything happened in between. There's actually a FASB prescription model in the guidance that actually lays out how to do the roll forward. And luckily for us and Bramasol, we actually created that report with a full roll forward capability. With that, I'll turn it over to Vivek and John to actually discuss that.
Sure. Thanks, Julio. So that roll forward was actually quite a bit of a challenge to develop, and we're pretty proud of the way it's come out. It's something that even SAP hasn't been able to incorporate in the newest RAR release as well. So that's something that we are pretty proud of at Bramasol. Another thing that we've really quite patting ourselves on our back is the way the product has scaled over the years. We've been developing these reports over the past, I think, a bit over 2 years. And since that time, it has been continuously improved. What Julio has just talked about just now is the way we have improved it in terms of the content, the richness of the content that we have, the drill downs, the additional data that's been presented, the summary level reports, and so on. But another way we've been improving is in the performance, the sheer performance of it. When we started working on these disclosure reports, it was at a much smaller scale. The number of contracts being calculated was much less. 30 to 40,000 POBs was a big amount for us at that time. But since then, we've had larger and larger customers who want to use or report on bigger and bigger data sets. And as a result, we now just recently concluded the latest version of our software, which is now able to easily handle 1.5 million POBs without any degradation in performance. And with some compromises, with a little bit of latency, it's in a production environment, it's able to handle more than 9 million POBs.
Yeah.
So that's something that is really good because this is a product that has scaled up really well, and it's something that even the out-of-the-box solution from RAR doesn't offer.
Yeah,
In addition to that,
yeah, go ahead.
yeah, sorry.
No, I was going
Yeah.
to say, in addition to that, Vivek, one of the things that hits me on this one and on the others is, you've improved the performance. We're handling even more data, but you haven't sacrificed the detail. And the
Exactly.
beautiful thing about what you've done, what the team has done, is you've built this from the ground up at the details up. A lot of companies, when they do remaining performance obligations, or they do the contract balance roll forwards in particular, are using a mathematical formula to get there. And what you guys have, what the team has done is use the actual real-time data to drive these numbers. It's not A plus B equals C, or B
Yeah,
equals C minus A. You've really calculated those numbers, right?
that's a great point, John. So yeah, it's not a summary. It's not just at the very high level. This is the actual, we are actually collecting and calculating the actual raw values that are in place in the system. And because that was a very key point for us, that just because we were providing summary level information and we wanted to provide good performance, we did not want to give up access to the really low level granular data that our existing reports had. That was we wanted to cater to both uh, operational reports as well as a more strategical reporting set. And the summary level reports offer ready-made 10K, 10Q level reporting.
Yeah,
To
absolutely.
increase on that, another area or another direction we have taken the reports is to offer them across as wide a set of platforms as possible.
Mhm.
RAR is a product that is available on ECC and S4, and so we provide out-of-the-box reporting for both those platforms. In addition, for those customers who want BW, these reports, we have also developed them on BW and on SAP Analytics Cloud.
Right, and you've done it in BW for HANA too, which
Yeah.
gives you an opportunity to bring data in. So if customers were using RAR, for example, for 75, 80%, but they still used, for example, maybe project systems for a part of their business, you can still bring that information in and create these same reports, right?
Absolutely. And one more thing I'd like to point out is you're not limited to SAP data. On a project that we just, for a customer we just recently wrapped up a project for, we actually integrated these reports with third-party, information.
All right. Well, that's great. So they all sound great. Let's, what do they look like? So with that, I'm going to turn this over to you, Sarah, and make you the presenter. There you go.
Awesome. Thanks, John. Let me know when you can see my screen.
All right, there we go.
Awesome. Okay, so based off of everything we just heard, and I'm sure for a lot of you who have been around with Bramasol and see what we've done, we've had a laundry list of reports that we have created. So we've created waterfall reports, we've got deferred revenue reports, operational reports that we created to be able to pull the data from the revenue accounting tool. We've also created all the disclosure reports. So we had the details, we were able to capture the information from within the tool and really bring it to life for the team to be able to report on it. So without having to constantly make reports or having, our customers having to custom make reports, we were able to pre-deliver these. But like Julio said, a lot of our customers also wanted to see that information at kind of a summary level. So that's kind of where we come in and we focus on kind of the phase 2. So I want to focus on 3 of the reports that we brought together to be able to kind of see that summary level view. So if we start with a disaggregation report, what we did is we allowed for our customers to be able to view this report based off of the different accounting principles, the year that we're looking at, and then do they want to see the report quarterly, annually? How do our customers want to summarize that data? So you've got the ability to come in as well as focus on one particular month. But when we drill into the report itself, what it does is it's going to give us kind of a holistic view. So based off of our geographical areas as well as our products. So we're able to see based off of the company codes that we have within the system, we can see where our contracts reside, as well as we kind of scroll down, we can also see what types of products we're looking at. So within our products, we're looking at devices, hardware, we may have other products out there, but you're actually able to see where everything resides. So far for 2020, we've really just focused on our contracts within the US and a couple of particular products, but in 2019, we can see we sold a lot more. So maybe it's gonna be picking up. And you can do comparisons of this year versus last year, 2 years back, to be able to see what that looks like. But like John said, like Vivek said, although we did kind of an upgrade to summarize the data, you don't lose the backend data. So, so I can actually drill in from here and I can actually, one second. Drill in from here and actually see what contracts are made up of that data. So for example, I can come in and I can see a contract that is available for a specific drill down. I can see the customer, I can see the sales document all the way over to the actual revenue accounting contract that was created. So this summarizes the data and brings it all together. So that's going to be our disaggregation of revenue. The other pieces, if we go into our contracts and balances, and this is going to be where we're able to see the aggregation of all of our contracts, balance, and liabilities. So like Julio said, this is kind of one that took a little while for us to get, but was one that we're very proud of. So, this is something that SAP couldn't bring together, but we were able to capture all the information that was needed for the contract balances, being the beginning as well as ending balances for the assets and liabilities. So we can also see here, we've got full drill down capabilities. So for example, if we wanted to see all of our contracts that make up our receivables, it's going to give us the revenue accounting contract that it was, what piece within there, so what sales documents that we're looking at, as well as the actual amount. So by performance obligation, being able to see what's actually brought up into this report. So you're not losing the details. The team can always start at the high level and drill back into the report. So based off of some of the disaggregation reports that we've created, or the contract balance reports that we've created in the past, to capture all the quantitative data, we're able to bring that forward. As we scroll down, you're also able to see here everything that was included. So you've got the beginning balance, if anything was recognized, increased, or transferred from the costs. You've got beginning balances of not only the assets, but also liabilities. And then as you scroll down, it's going to give you your ending balance. So anything that's changed that happens within the contracts in the middle is also captured there. And you're able to see that this lines up with the reports that are needed with the quantitative and qualitative requirements based off of FASB.
That's great. Yep. And then the beauty, as we said, with what Vivek and team have done, the whole team has done, is the fact that because we built it from the ground up, you can have that drill to capability, and the numbers tie. So thanks for showing that. Sarah? Oh, we seem to be having some technical difficulties. Carrie, can you still hear me?
Yes, John, I can hear you. I cannot hear Sarah. But...
Oh, I'm back. Sorry.
You're back. No problem. So in addition to these reports, there's some other things around dashboarding and stuff, Sarah?
Yes. So in addition to the reports, we can take it into the dashboard. So we've created some dashboard capabilities based off those reports. So for example, we're able to pull together not only the information from the 3 summary level reports, but from some of our other disaggregation reports and some of our other disclosures. So this front view, and this is just a view that we've kind of chosen, but with our team, we're able to really create any of these dashboards to pull in KPIs or important information that revolve around our customers' revenue accounting process. So from here, we're just able to see kind of our revenue analysis over time. As we're kind of going through, we can see, you know, we had a lot of revenue in 2019, and we're kind of picking up in 2020. And as we go forward, we'll be able to see those posts as well. We can see geographically, like we saw in our summary report, we can see kind of where our contracts reside. So where the revenue is coming from, the US, Canada, and a few other countries, and then it's broken down by materials and performance obligations below. So kind of where that information comes from. As we scroll across, we can do some analysis on some of the reports that we have. So we can see in a summarized level what the information is pulling from. So if we just looked at that last contract balance, we'll be able to see the liabilities for the fiscal year. So if we just wanted to see kind of high level where that information is, and then break down contracts and liabilities, so kind of where our contracts and liabilities reside, and if we wanted to do a roll forward or look ahead or roll back, we could do so as well. So if I wanted to change these to, you know, multiple years to going forward, or if I want to look ahead maybe 5 years, I could do that. One of the other reports we didn't actually get to is actually going to be the unsatisfied POBs. So being able to see what's unfulfilled, what do we still have out there. For example, we can see here with event-based, we might be only able to see what's coming up right now as we're looking at our contracts, but for time-based and overtime, we can see that that actually goes out 5 years. So we can see over the next 5 years, when are we expecting to see some revenue for our time-based, and then we can see so as well. So again, this is just kind of some of the options that we've taken to pull the data from the reports that we've seen, but utilizing the analytics tools, we're able to create multiple dashboards based off of the revenue analysis.
Awesome. Thank you, Sarah.
Yeah.
All right, let me take back control. All right, so everybody, you've gotten a flavor of what we've been able to do in the revenue accounting space, but the team's been busy not only in revenue accounting space, but in leasing. Julio, you know, we know that the SEC, and due to COVID and a number of other issues, has postponed at least the private side of things, but they're still making comments on the public filings and what they're looking to see. So tell us a little bit about what you're seeing.
Yes, John. So yes, just as a reminder, the FASB did postpone ASC 842 for 1 more year, so it will be available for public companies, private companies in 2021. But the public companies have been filing for the last 12 months, and essentially, the SEC has come back and asked some really intriguing questions, because I think the challenge that companies have faced is the difference between 840, which was the old leasing standard, 842 is completely different. So under 840, you would just simply have an expense item, right? It goes to expense and you pay it and then you move on. Under this new standard, you really have to think about, what is my lease term? How long I'm going to be in this lease for? Because now you basically have to put all these previously off balance sheet commitments on your balance sheet as a right of use or lease liability. So the SEC has come back and asked a number of questions on, how are you calculating your discount rates for finance and operating leases? So in today's environment, with the interest rates being so low as they are, companies have basically now started to relook at their incremental borrowing rate, because borrowing rates have gone down tremendously in the last 6 months because of what's happening in the world today. So that can trigger some changes. So the SEC has come out and started to question companies about, what is your weighted average discount rate, and why is it significantly different between your operating leases and your finance leases? Now, we know from that perspective, companies go out and say, okay, if I were to buy this asset operating lease, what would be the interest rate? So it should not be that different. Secondly, they're asking about disclosing, what is my short-term lease cost? As we know, that is a requirement, and those are leases that are 12 months or less. Also, for the expenses that do not make it into the net present value calculation, you have to disclose this separate line item as a variable lease cost. What is that number, and where is it coming from? Also, too, you talk about the variable payments subject to an index. So what does that mean? That looks to, you have payments coming out and are impacted by the CPI and are changing. So SEC has asked a number of companies to understand, how are they calculating that. So we know that is a big difference, because if you know what your index is going to be for the next 5 years, that number can be included in your net present value calculation. However, if you cannot forecast out your CPI or whatever the variable rate is going to be, you would put that in your variable expense and true it up every quarter. So it's a big difference. So the SEC is asking companies to fully disclose those type of calculations. And lastly, just wanted to get into, because a lot of companies have been changing because of the recent pandemic, how are they accounting for leases, and they're modifying their leases. So the SEC has come back and been asking, tell me about how you're accounting for your lease incentives. Tell me about how you're modifying your lease contracts. So those are some of the questions, John, that companies have been asking about.
Yeah, and we know, particularly as you highlighted, Julio, now with the whole the issues and challenges we found in this times of economic disruption, quote unquote, a lot of lease incentives out there, and sublets and others, and people are going, the SEC is going to want to know, how did you calculate that? So the good news is, of course, Bramasol has done a lot of work in these areas. So maybe you and Vivek can talk a little bit about some of the work we've done in the ASC 842 IFRS 16 with our reports.
Sure, John.
Yes, definitely, John. Sorry, go ahead, Vivek.
Julio, why don't you go first, and I can talk about the technical stuff later.
Yes, so from a high level perspective, what we've seen is, so Bramasol has put out a full portfolio of all the required leasing disclosures that is required. So what does that mean? That means there are over 25 different disclosure points that the FASB is requiring. Bramasol has built an end-to-end reporting solution where connected to CLM, you would have all the correct data points in the right format, which is very important, and to be able to be disclosed upon in your public filings or private company financial statements. So that was phase one. Phase one, and this is the new disclosure reports that we've added to functionality, really drives about the analytics and dashboards, because companies have come to us and say, okay, you have basically given us all the information we need to file our financial statements, either with public companies with the SEC. We have all the disclosure points. We built end-to-end weighted average solutions for lease term and IBRs. So you have the public company filings correct and adequate. But what companies want now, especially in the current economic environment, they want to know, because leasing happens to be one of the largest spends for many companies, especially companies in the retail space, oil and gas, manufacturing. Why is that? Because they lease a lot of properties. So they want to be able to understand, I mean, if you think about it, I believe Walgreens put billions of dollars of spend on their balance sheet adopting ASC 842. Why is that? Because Walgreens has thousands and thousands of retail spaces all over the country. So it's billions of dollars that actually went on a company's balance sheet. So what they've been asking for now is really, tell me how I can slice and dice my spend, and tell me how I can get more insight to action to make better decisions on these spend. I'll turn it over to Vivek and John now, where they're going to actually show you how we've actually improved the functionality of these reports. Vivek?
Sure, thanks, Julio. So unlike RAR, where we developed the reports a lot after the RAR solution was released, leasing, we had the opportunity that as the CLM solution was being developed and we were early implementers of that, we actually saw the requirement for this coming way ahead, and this reporting solution was co-developed as the main CLM solution was being incrementally developed. So this is another example of us being ahead of the curve in that area. So over here again, we started off small with a basic reporting set, and over the period of time that this product has been released, we have kept adding on new features to it. So the initial reporting set was very limited. Then we added drill through capabilities. Again, just like the RAR solution we saw a short while ago, this allows you to drill down to the very lowest level. You can look at the individual leases from there. Then we also worked on performance. That also has been seen a lot of improvement compared to where we were some time back. Again, as with RAR, as per Bramasol's strategy in general, this is an offering that has been available across multiple platforms. We have it on ECC, on S4, and on SAC.
Absolutely. And again, like the others, the fact that you offer drill through capabilities is because we offer and have built these from the ground up. They're not just, simulations of results or mathematical exercises. It truly is the aggregation of data in a way that allows you to get to the bottom line quickly, right?
That's right. So literally within a few clicks, you could be looking at the really top level view, the summarized view, and a few clicks deep, and you can actually go in and open up the contract right from the report.
Right. And for multiple reasons, for a couple of things. One is, your ability, Julio, as a controller, to ask questions about the lease portfolio and dive into it and aggregate it and disaggregate it by geographies, asset classes, et cetera, is useful. But also, as you think of, when the auditors come in and say, hey, prove to me that everything is linked and how it feeds one another and these reports make sense, the fact that we've started with the lowest level of data and built the reports up from there, not from the other direction, allows you to do that as well. So absolutely. So Carrie, hello.
Hi, John.
So let's talk a little bit about, what do we have here? So we're going to do a demo. Maybe you can talk us through your slides, and then we'll hand it over to you to show what's going on.
Absolutely. So as all three of you had just talked about the development of the FASB report and the ability to go into the drill through to a detailed report and then to the lease itself. So I know for some customers on the webinar, this is going to be a refresher for you, and then it'll be the first time for others to see that. So we're going to do the drill through capability, and then the next piece of the demo I'm going to show, if you'd like to go to the next slide, is, and I'm back up just a minute, like Sarah showed, Bramasol has the dashboards to be able to pull the data and report at the summary level, drill through level with the dashboard. But I wanted to address something else, that because CLM is just part of core SAP, all of the KPIs and analytics that come with S4 also leverage the information that's in CLM. So instead of showing a dashboard, I'm going to go into a standard payables KPI and then drill through that you could see leasing the contract information from there as well. So if you just go to the next slide, so this is what I'm talking about there, is just starting with the KPI on invoice processing, because again, if you're a leaseor, you've got payments going out, so you've got your invoices, and being able to go from a standard S4 KPI, drill through different looks of, again, who are your major leaseors. If you're a leasee, I'm sorry, you have payments coming in. Look at your leaseors, how many leases do you have out there, what's your spend, and be able to go into the detail. So a little bit of different approach, leveraging standard SAP KPIs versus Bramasol dashboards in my demo. So having said that, I will
turn it over
share.
to you.
All right.
I can see your screen.
Perfect. Okay. So we have, I'm going to show you the disclosure report, the first one, the FASB report, and I know Julio and I are going to probably tag team on this one. We also do have the 5-year maturity report. That is a reporting requirement. And like you saw with RAR, we've got the validation and operational reports to support all of the reporting numbers as well. But let's just due to time, we're going to focus on this one. Let me just select the variant. I'm just going to look at single company code for the purpose of today's demo. And I want to point down here on the company code, group currency, contract currency, some of the filter features that we have. As with RAR, as customers came in and had additional requests, one of them was, yes, you can't for reporting purposes have different company codes in a summary report, but we'd like to see a full report of all the data and the actual reported company code currency. So we built that into the report as well.
Right. And just to be clear, Carrie, you've pointed this out to me several times, but just to be clear, these currency codes, these currency rates are the ones reflected in SAP master data. And so you're not having to use a third-party solution with one set of rates and another one and then true those up. These are the rates that are in SAP, right?
They are, and historically, anytime you have to go back and see what was the value at a specific time, it's going to use what the rate was at that time, just as SAP stores all audit and historical data. Yes.
Thank you.
So we'll go ahead and we'll run this report. And how Bramasol developed this, and I'm going to have Julio talk a little bit about that, is that companies can cut and paste and put this right into their footnotes for their 10K. And there was 26 different reporting points that have to be disclosed. And I just call this one report, or if you look at the top, it talks about one report, but it's actually a combination of multiple reports that are being consolidated. And Julio, maybe you just want to go through maybe the 3 different sections.
Sure. And just FYI, I mean, I am very proud of the work that we in Bramasol have done to do this, because we met the standard, we saw the standard. This on the screen here, what you're seeing is the prescribed format directly from the FASB. And the fact that this was actually built and fully functional, our customers love it. It says a true testament of Bramasol's capabilities, but I digress. So there are 3 areas in this report. It's over 25 different data points. The first top half section is really the operating, the P&L area, where you talk about what is my spend, what is my lease cost, broken over by finance and operating. Then, as we talked about earlier, you have to disclose your low value, you have to disclose your variable lease expense, you have to disclose your short-term leases. All those, and then also too, as a credit, your sublease income. So we know in today's economy, a lot of companies are reducing their leasing space and looking for subtenants to lease out their current leases. So that sublease income is a nice way to offset your leasing spend if you can't get out of your contracts that a lot of companies have been trying to do because of this change in work situation we have today. In the middle of the screen, you have all the cash flow impacts, which is basically you have to disclose what are my new leases that I encountered. So we all know leases are non-cash transactions. So that is what we have there, the measurement in exchange of, and then we also have the leases, cash paid for leases in the period. And lastly, which I'm extremely proud of for us at Bramasol, is we have these weighted average remaining calculations. A lot of companies, before they took these reports, they were doing these calculations in Excel. And luckily, our great developers have created these weighted average calculations, and they basically come out from CLM directly. And just as a FYI, these calculations have been audited by our customers and their respective auditors, and we haven't had to change any of our formulations behind the scenes. So that's good news. I'll turn it back over to you, Carrie.
Oh, thanks, Julio. Okay. And then want to go into the capability to drill down on any of these. Let's do it on operating lease costs. So now I'm going into a detailed report of what made up all those numbers. Now this report can be manipulated if I wanted to search on or sort on, let's say, interest amount, then I can do that. It can be exported into Excel. So for auditing purposes, again, this is the report that's going to back up the numbers that you are disclosing in your 10K, 10Qs. Then from here, I'm just going to do this really quick. I'm selecting over here a specific contract, and now I'm going right into CLM. So now I'm into the contract itself, and from here, I can go in and look at a detailed cash flow analysis of that specific contract. So again, this is getting to the finite data that was used in summary that's rolling into your FASB disclosure.
Carrie, if I could just add really quickly for the audience, just to remind them that also we have these great validation reports, exactly what you're talking about, right, Carrie?
Absolutely, yes. And then the second part of the demo, want to show you how you can leverage, again, standard SAP KPIs and analytics and Fiori, because again, CLM, this is just part of SAP. That data, whether it's payables, if you're a leasor, leasee, if you've got receivables coming in, we talked about the cash flow in, then you can leverage any of the accounts receivable KPIs. But we're just going to go ahead and select the KPI for invoice processing. Again, you've got invoices because you've got payments going out. The ability to see on a timeline, what are my total spend, and then the number of items, the number of contracts. If I wanted to see that by supplier, just changing my view. So now I'm looking at my top suppliers. As you're doing negotiations, John mentioned that interest rates are dropping. So it's going to be a really good, very powerful tool to be able to see, okay, who are my top leasors? What do I have the most contracts with? That might be the person that the company that you renegotiate with, or it might be one of your smaller leasors that actually are providing you better rates, and it's time to give them more contracts. As those of you that are familiar with S4, I can also, even from these summary reports, drill into, I'm going to go into supplier balances. So now I'm going to look at this information by supplier. Let's just go ahead and put a company code in there.
And Carrie, could I just add that, beyond my love of this capability, this is exactly relevant for any company today, because we have gone from compliance now to value add, insight to action. Everybody wants to understand, how can I reduce my spend? How can I reduce my P&L expenses? If you have this leasing data, this is a perfect opportunity for companies to say exactly what you said, Carrie. Here's my biggest lessor that I'm paying millions of dollars to. I can go to him or her and say, you know what, I have 2,500 stores I'm leasing from you. You're my landlord. I need to reduce my rates. And this gives you the visibility and insight for you to actually make decisions to do something about reducing your spend today. Carrie?
Yep.
Absolutely. Yeah. And while you were speaking there, I went ahead and we were looking at the line items by this business partners, okay, or your leasors in this case, and then just double clicked on one and went right into the line items that now you can see all of the payments that are made. This agreement right here, that's actually the contract itself. You can go into the journal entries, so drill through to the very lowest level of data that's out there. And then I'm going to wrap it up, but I was showing you a standard KPI, but as Sarah has shown, all this information now from CLM using Bramasol's reports, standard SAP reports, that data can now be pulled into dashboards, or you can start at a summary level that is providing you an overview of the entire company, and then drill into the information that you need. So John, I'm going to go ahead and pass that over to you.
Pass the baton back. All right, well, this is great. And when you and I, when we've all been talking about this in the past, and we'll wrap up in a moment, the easy part is to take a look at it from an accounts payable perspective or accounts receivable. And Carrie, thanks for showing that. But think about this as an integrated solution that allows you to have insight into your cash position, because now you know what the inflows and outflows are, and because it's integrated with SAP, you can begin to do cash flow forecasting and predictive analytics and see what the impacts are as you renegotiate these leases on cash flow. So, it's not just, hey, yep, I can see all of these reports and that's great, but think about it from a holistic perspective. So in wrapping up, I want to, talk for a moment about these few things. Number one is begin with the end in mind. Think about what you're trying to accomplish. And as Julio said, we're working with companies and they're moving from what we've called the comply, optimize, transform. They're moving along this framework. And now they're looking at the optimization and how do I improve my business by using these tools? And the disclosure reports are a great example of a tool that was built and is built to help you speed up your compliance issues, whether it's with ASC or IFRS, but they also can be used to help you improve, as Carrie showed, your business. The same with Sarah. Really understand where your POBs are, what your unsatisfied POBs are, where they fit in the terms of event or time-based. You've seen that we continue to add and improve features and expand coverage of both the ASC and IFRS reporting. We've improved the performance, whether it's with the RevRec tools that we've improved the performance, both in terms of scale, so going from tens of thousands to millions of POBs, or almost even tens of millions of POBs, and then really improving the speed with which these tools work while adding all of these features. And finally, we've been able to bring in dashboarding and analytics. So with that, I want to thank everybody. Just to remind you that Bramasol is a complete SAP organization. We focus on all of the aspects of S/4HANA. We can provide companies with a full portfolio of solutions around ECC and S/4HANA, whether it's helping you with specific areas or helping you understand how to do a business transformation across all of S/4HANA and all of your business. We've talked about both the leasing and the revenue accounting. We do advisory services under Julio's organization to help you really understand the implications, issues, and challenges around advisory services and your accounting. And finally, of course, we have deep, deep expertise in treasury management. So with that, I will thank my colleagues, Julio, Carrie, Sarah, and Vivek for their time. I hope everybody enjoyed this webinar, and I look forward to our next one coming up soon. So thank you, everybody, and have a terrific day.